So now coming back to look at the wider scope of the effect on the Eurozone as well as the euro as an exchange currency, how are we going to be deciding on what will be the effect on the euro currency if the Greek exit is as orderly as we expected?
Well, I think the euro will remain, with or without Greece. But I also think that Greece will still be in the euro. The people don't want to leave, but they just don't want to practice the austerity that is now being imposed on them. But I think the possibility of having the new drachma will force on the Greek people an even greater austerity than if they remain. So what kind of bargaining chip do they have? Nothing. Yeah, they need the money, so they just have to, I think the phrase is grin and bear it. Yeah?
Yes. And talking about the drachma, how will the drachma be devalued against the euro currency with Greece's situation?
I think the government, might, in the event of the exit, the government, might force a conversion of the deposits, in the banking system from euro to drachma, and we don't know what rate it should be, but definitely the markets will say that that's not enough. There will be massive devaluation of the currency, and those who have kept their wealth, in the banking system, will, I think, lose a lot of money.
Well, I think on this point, the Greek people have already exited on their own account. They have withdrawn money, their own money from the bank, their accounts. So the money is somewhere else, and it will not therefore affect them very much, except for people who still have euros in the pocket.
But then if there are people who already have euro in their pockets, isn't that kind of action going to cause a deposit flight?
I can imagine that there will be a new group of millionaires who will greatly benefit from the new drachma, because you now can convert, and when the drachma comes in at a greatly depreciated value, then you become rich in Greece, because everything, just like in 1997 we went from 25 baht to $1 to 50. So suddenly, new millionaires appeared in the Thai scene. Of course, it doesn't count very much in the bigger picture.
Yes, Kopsith.
Well, I think that it's going to be, maybe the facts have not been given to the public in general through all these campaigning. I would imagine that the leftists would probably say that we're going to renegotiate with the EU authorities and the IMF that the packages and the austerity are just too painful. But I don't think that they were given the information that if they disagree or try to negotiate and the IMF or the Germans say that, no, we can't agree with your terms. And I would imagine that the other pain that they have to take is if there is a devaluation, and I think there's growing likelihood of a devaluation, because that would probably try to help some of the imbalances that have been created with Greek over time. For example, I think the one reason where it seems that it could be a ways of gaining competitiveness, but there are other painful reforms that has to be taken with Greece, where they said that minimum wage has to be reduced, and so on and so forth. Coming back to how Greece would come out of this, it seems that either they take their austerity and then they have social unrest. People will continue to protest. But I fear that the people haven't been given the full facts that if they select a certain party where they try to go anti-austerity, they don't know the other options that are available. They can't deny austerity and continue with the euro. I think that's what the Germans are trying to say, that we cannot do this because it is moral hazard. What you're basically doing is trying to reward bad behavior, and that's unsustainable, I think, on that basis. So it will probably be an impasse. And if you look at our crisis in 1997, I don't think we had the bargaining power to say we wanted to continue to use the peg at 25 baht to the dollar. Eventually, the markets will force the devaluation. For example, let me give some indication that the people who are providing funding, either to the government or the banks, have left. If you look at Greek bonds, 10-year bonds, they're being priced at about maybe 15 cents to the dollar or to the euro, whatever you want to use. So bond investors have already left. They don't want to lend to the Greek government. Okay. If you look at the bank system, investors who have bought into basically European banks in general, the price of banks are now trading at about 0.4 times price to book value. That is the same phenomenon which I saw back in 1997. Investors who invested in banks already left. Okay, so the last person who's about to leave and are leaving right now are the depositors, and that creates a big problem where if you do not have a government where the EU authorities can talk to, there's basically, you can call it economic anarchy that's happening right now. There's no entity whereby the IMF or the authorities, the Germans, can talk to negotiate because there's no leadership right now. Yes. So we have to fix that leadership first. But then if the leftists do take power and they live by their campaign pledge, they said, no, we're not going to do with austerity. And then the ball is going to be thrown back to the Germans, and the German says, well, no austerity, then no money. And then we go back to the same position again.